We want to get to some breaking news. U.S. existing home sales hitting the lowest level that we've seen since 2010, 13-year low. When you take a look at some of the numbers here that we are seeing, it fell just about 2% from last month to a seasonally adjusted rate of 3.96 million units. The lowest level, like I said, since October 2010. When you take a look into where we did see some of that activity on a regional basis, it dropped about 1.1% in the South, decreasing 4.1% in the Midwest, dropping 5.3% in the West. It did increase just a bit of 4.2% in the Northeast, but it's really a continuation of the narrative here that we've been talking about so long when it comes to the housing market. This massive jump in rates, it's weighing on affordability. People are not out there looking for homes. They're staying in the homes that they have, given the fact that their rates on their mortgage are so much lower than they are today. People also just simply can't afford to be looking for homes in this market, especially the first-time home buyers, we know, among those most pressured by the current dynamics right now in the housing market. So once again, existing home sales falling to the lowest level that we've seen in just about 13 years.
And the market's not good for first-time home buyers right now. The first-time home buyers were responsible for 27% of sales in September. That's off just a shade from the lowest level since they have begun tracking that data, which was 26%. That was back in November of 2022 here. So you fast forward roughly a year to this point and where the data is being tracked in September of 2023 here. And we are just off of one of those all-time lows here. All cash sales, they accounted for about 29% of transactions in September. That's up from 27% in August, 22% in September of 2022 for that year-over-year comp. And then here's what's interesting here. Some of the second-time home buyers who make up many cash sales, they purchased 18% of homes in September. That's up from 16% in August, 15% one year ago as well. So cash still one of the mechanisms that for the second-time home buyers they are looking to deploy here. But there are also a fair deal of distressed sales that are still part of this figure. Foreclosures, short sales, they did represent about 1% of sales in September. That's roughly unchanged from the last month. So all this considered, it just comes back to where this mortgage rate sits at right now, where people are finding the opportunity to get in a home if they can find the right financing terms. And the 30-year fixed mortgage rate, that average right now for Freddie Mac was 7.57% as of October 12th.
And it's just been heading up since then. We talk about the fact that it's closing in on 8%. And when you take a look at home prices, you would naturally think that if we do see this massive surge in rates, we're going to see some pressure on the housing market. Then, of course, we'd see eventually some pressure on home prices. And that hasn't happened too much. When you take a look at the median price for existing homes here, $394,300 last month, up 2.8% from a year ago. The third month in a row that we've seen that year-over-year price increase. So when you combine that with the fact that rates now closing in on 8%, certainly going back to the affordability point that you made, it's very, very hard for people out there who are looking to buy a home. Whether or not you're a first-time home buyer, it's hard for you to afford what's on the market today.
I'm just looking at regions where I can purchase right now. I mean, it looks like existing.
Getting smaller and smaller by the day for me.
It is. These prices, yeah. All right. Well, we'll go through a regional breakdown another time.